Hey there and good afternoon everyone. This is Trader Tim from eMiniMind.com doing a Monday market analysis video for the 2nd of October 2017. Wanted to talk quickly about the overall market picture and then jump into a couple of really good specific trade setups that I saw today and various trades that I took and things that kind of stood out to me that I thought would be good for discussion. On the ES, we've achieved our 2520 target. That is the big 50% retracement from 2420s up to 2520s. We've been talking about that level for quite a while, and we've gotten there and going a little past there as well. It's the negative 61.8 of this smaller daily, as well as the negative 23 of the little bit larger daily. So at this point, the market can do two things. It either reaches the target and then pulls back right away, or in this case, reaching the target and then kind of accelerating through it. So we could see some more upside in the form of these big body candles that we kind of talked about might be the path that the market takes to get to the negative 23% target. And with all this open space above us, there could be opportunity to continue and see more of these days. But I would look for, I'd be watching out for these spinning tops or hammer formations up here that might indicate a potential rollover. Or the other option is a bull flag up here, where we just kind of stay within this candle for a couple of days, moving sideways at the top of the candle, forming a few inside days before moving higher. If we do pull back, we can use this previous swing low to highs, and that currently is a 25.06. So we'll see what the next week or so gives us in the markets. I want to talk about some trade setups from today. One question I get a fair bit in the trading room is it okay to take a retest? So the morning we opened up here today, I'll zoom in a little bit, and the first setup, drawing from lows to highs, well, it traded before the 15-minute time frame that I give myself to not take any trades. And so that traded, it bounced, and then it pulled back to that same level after 15 minutes in. And so the question I get is, well, is it okay to take a retest? And my answer to that is, it's okay to get in on a retest if you go back and look at the initial entry and determine that if I had taken the original entry, I would still be in the trade and we did not already hit the target. So in this trade this morning, I'm not a huge fan of taking the retests, but in a situation like this where the market trades at the level pre 7:45, 15 minutes in, and then trades there again after 15 minutes in, we didn't hit the target and the stop didn't get taken out. We broke swing highs, so that's an opportunity to move your stop one tick below the swing low. So you could basically put your order a tick above the 50 and place your stop a tick below if you're looking for an opportunity to get into a, potentially as the market's coming down, it could double bottom, in this case triple bottom, before rallying, and that's what happened today. So certain situations it's okay to play the retest. You just want to make sure that the trade didn't already reach its target, or there wasn't an opportunity to bring your stop up above where the retest level is. If you didn't take the retest, or you just passed on that one, you can simply wait for the next retracement, which was up here. The very next one didn't make it all the way into its 50, but the next one pulled pulled back nicely, 25, 22 50s, and that went on to its negative 23 and then some, negative 61.8. And then after I was about an hour into the day, I'm looking at the most recent swing lows and swing highs. So after we made the high in the morning, we pulled back and broke this swing low down here. If I zoom out a little bit, from lows to highs on the morning. Didn't quite make it there yet. And even though the market kind of got this little double bottom down here, I'm considering this swing low up top here the break. So this is now a lower low as it relates to the previous swing low. So taking the next short, the very first short on the morning, is totally valid. Um, we did not come into the 50% long yet, so it's just a matter of whichever trades first. If the long had touched, then I'd pass on the short. But in this case, we came down, didn't touch the long, we bounced and took the short, 25, 23, 50s, and then trailing my stop on the way down, we traded through that larger trading hours only daily long. So once we break the swing low, that anchor down here, you can tighten your stop above, one tick above that swing high. Market makes it down to the negative 23, gets a little bit of a bounce, moves lower again. You can take your stop, same thing, move it down. In this case, getting taken out right about the negative 23. The next setup from that entry point that we had down to lows was a little bit dirty, meaning we traded into the 61.8, but worked out nonetheless. 25 22s. Now, this is a great example of the need to be patient, waiting for that swing low to break before tightening your stop. Just leaving your stop at -6 at the beginning of the trade and being patient as it starts to kind of develop. Because sometimes you get these almost retests where the market bounces and comes up towards the 50 a second time. Well, if you get super aggressive with your stop, you're going to miss out on, the bigger move. And so letting the market break the swing low before moving your stop from the -6 to one tick above the next swing high is what I like to do. Now, this one made it down, traded right at the negative 23 and rather quickly. So as soon as we started to sell off, we moved pretty quick, in a couple minutes, and just basically straight down in all red candles. So taking half off at the negative 23 is always, my first course of action. And then because I looked at the distance between my stop way up here at 25 22s and where we were at on the negative 23 at 25 19s. It's not a huge distance, about 4 points, or about 3 points rather, but I chose to divide my remaining half of the position in half again. So I've got half off at the negative 23, just one tick in front of that. And then the remaining half I split into two, and I tighten my stop on, so what would be a quarter of the initial position above the high of the lowest candle here, essentially trailing each candle's high. And then the other half of that last half, so the last quarter, I just left up here. And that ended up getting taken out on this kind of V reversal. But in doing so, you're always taking off half of the negative 23 to lock in profit, and then some sort of trail on the remaining half. You can divide that up in two if you've got enough contracts, and do, half, a quarter. But that's kind of a good way to manage your risk in a way that, you're trying to stay in the trade as long as possible, giving it as much time to kind of continue on, because I'd rather get into one trade in the morning and give it a little bit of room at the entry, especially in a market like the ES, and try and stay in, just getting in once and staying in, riding it till highs of the day or to lows of the day, or thereabouts. And so by trailing your stop like that, that's a really good way to help manage a position like that. There's one other thing I was going to talk about on yesterday, on Friday. We talked about Friday morning. The long setup in the early, before that first 15 minutes. And so even though I won't take a trade in the first 15 minutes, other than the first 5-minute break, I'll still draw up the setup and you know, begin my day off of those levels. I like waiting for the first 15 minutes because, like last Friday, we developed a very nice definitive low, high, higher low, lower high, kind of went into this triangle formation. So you can kind of use that as a way to let the market give you some anchor points. That first 15 minutes, the market develops anchor points that it then can break and you can use to trade later in the day. Same thing with this morning. We kind of move sideways, but at least the market in that first 15 minutes is able to establish a high, a low, and then we've got this kind of this horizontal movement, triple bottom, almost a triple top, if you will, that then we can start taking trades off of those levels as reference points. So as we head into the this next week of trading, a lot of room and potential to go higher, but also I'm watching for those inside days, that bull flag up at highs, or potential rollover. The fact that we have had acceleration into these new highs is a positive sign for the bulls, and all things are looking pretty good for continued great trading in the months to come. So hope to talk to everyone at the live trading room tomorrow morning. You can check that out at emoneymind.com/VIP. Thanks everyone. Talk to you soon.